Well, good morning, everybody. Today I'm pleased to present the Government of Alberta's 26-27 first quarter fiscal update and economic statement. The Q1 numbers tell a positive story, but one that comes with important context. When Budget 2026 was tabled on February 26, we were facing a $9.4 billion deficit. Today, we are forecasting a $2 billion surplus for 26-27, an improvement of $11.4 billion in a single quarter. And while I can't speak to the final 25-26 year-end annual report results before the Auditor General has completed his work, based on what we have seen so far, with strong energy prices in March and strong investment returns throughout the year, we are also expecting to land in a surplus position for the 25-26 fiscal year. This is good news for Albertans and for Alberta's future. It means we're on the path to the province's 6th consecutive surplus year. However, we know energy prices are volatile, and we cannot budget based on the expectations that high oil prices will last. So it's important we recognize that the $11.4 billion shift from Budget 2026 is primarily driven by non-renewable resource revenues, fueled by the Iran war, pushing oil prices significantly higher. We built Budget 2026 on conservative assumptions, including an average oil price at $60.50 per barrel. That was the right call at the right time, given the realities of that time. But 2 days after the 2026 budget was tabled, the conflict in the Middle East began and completely shifted the geopolitical landscape, increasing WTI prices and volatility. Since I became Finance Minister in late May, oil prices have ranged from as low as $68.55 per barrel to as high as around $96.60 a barrel. And today, as of 9:30 a.m., we're sitting at $82.27 a barrel. Alberta has been here before, flush with temporary increases to resource revenue, increasing spending to match, and then oil drops, but the deficits stay. We are not going to do that again. So while this is a good news budget, we know things can change quickly, and we cannot mistake a temporary windfall for a permanent trend. And despite this projected surplus, Alberta is not yet in a cash surplus position. We are significantly closer than we were on budget day, but where fiscal responsibility remains a top priority in our province. We are not in a position quite yet to be able to responsibly invest in the Heritage Fund or repay existing debt. And since we can't control how global forces will continue to create volatility, I'm also approaching this update with a commitment to focus on what matters and what we can control. Keeping our focus on sustainable investment and economic growth will allow us to maintain a solid foundation for our province. Alberta continues to outperform the rest of the country on many fronts, and this economic update reflects that clearly. Our strong activity in the energy sector, increased manufacturing and agriculture exports, progress on major projects, and resilient consumer spending are all contributing to a brighter economic picture. Alberta's economy is expected to grow at a strong pace in 2026, with real GDP growth projected at 2.3%. And that momentum will continue into 2027 as investment continues to pick up, with real GDP growth next year projected at 2.5%. Alberta has added over 39,000 jobs so far this year, building on strong gains from last year and bringing employment growth to the highest in the country at 3.5% year over year. And investment in the province is increasing. The energy sector continues to do well, and growth is increasingly being driven by sectors outside of oil and gas. The broad-based growth matters, and while oil prices have made significant impacts on our update forecast, today's announcement is not just an oil price story. Our Q1 forecast assumes WTI averaging at $73.50 per barrel. That is lower than the price recorded in Alberta's 4 most recent surplus years. Today, at a lower projected price than any of those years, the Q1 forecast shows Alberta's fiscal position is stabilizing, not just because of commodity prices, but because of the work Albertans and Alberta's government have done to strengthen our economy, diversify our revenue base, and improve our fiscal foundation. However, this bright outlook is not without its challenges. U.S. tariffs remain a significant and unpredictable factor for some sectors. Inflation pressures, weak national growth, trade uncertainty, and volatile energy prices continue to complicate the fiscal picture. And while we've seen positive gains, we will continue managing our approach carefully in the context of these significant uncertainties. The Q1 update includes a lot of highlights that I'm happy to share some of those key points with you today. As I mentioned earlier, we have made significant overall improvement, from $9.4 billion deficit to a $2 billion surplus. On the revenue side, the spike in oil prices increased non-renewable revenue by $9.7 billion to a projected total of $23 billion. Personal income taxes are up $420 million due to higher than expected 2025 tax assessments and an upward revision of personal incomes in 2026. Corporate income tax revenues is up $545 million due to stronger corporate profits. Government transfers are up $346 million due to some federal funding from 25-26 moving into this year. And net income from government business enterprises are up $586 million. We are also on track to meet and exceed the Heritage Savings Trust Fund forecast of over $32 billion from budget. On the expense side, costs have increased by $315 million, offset by revenues such as reprofiling of federal agreements from last year. The capital plan is also forecasted to increase by $717 million, mainly due to unspent funds from 25-26 being moved into this year, along with new approvals, such as $137 million to accelerate 45 new and modernization of school projects in our province, and $26 million recently that we announced for upgrades to the University of Calgary's Olympic Oval. These increases are offset by $225 million decreases in debt servicing costs due to the significant improvement to this year's bottom line and therefore lower than expected borrowing requirements. Alberta is in a stronger position than anticipated, but there's still a lot beyond our control. Energy prices can change quickly, trade uncertainty is real, and every dollar spent on debt is a dollar taken away from classrooms, hospitals, and families. A forecasted $2 billion surplus is welcome news, but it's not a blank check. We will not commit temporary revenues to permanent expenses. We've seen what happens when governments do that, and it's Albertans who pay the price. We will be prudent with what we can control and make decisions that help families and communities in the long term. That's what Alberta's path forward will be built on, our commitment to focus on what Albertans matter. Protecting essential services, controlling spending, balancing the books, reducing debt, and growing the Heritage Fund. And what the numbers genuinely support is when the numbers do genuinely support, we will put money back in Albertans' pockets. We've seen the strategy work. In the last 5 years, we have grown the Heritage Fund by 80% while keeping programs and services intact that Albertans rely on. We will continue to manage taxpayer dollars with the discipline this moment demands, ensuring Alberta remains strong, resilient, and well-positioned not just today, but for generations to come. That's the commitment that we have made to Albertans, and we're keeping that promise. With the 25-26 year-end results expected to land in surplus and the 26-27 surplus forecast, Alberta's government will deliver its 6th consecutive surplus budget. Alberta has been given an opportunity, and we will not waste it. And with that, I'm happy to take some questions.
Thank you. Hello? Hello. Thank you, everyone. That brings us to the end of the formal portion of the announcement. We'll move to the media Q&A. So if you have any questions, please approach the mic. We're going to take one question, one follow-up, and we'll start in the room, and then we'll move to the phones. Please remember to state your name and your outlet. Okay, and we'll take the first question in the room.
Morning, Minister.
Morning.
Adam McVicker with Global News here in Calgary. First, the surplus cash situation. Any concerns about that none of this surplus at the moment, as forecast, will be allocated towards paying down debt or the Heritage Savings Trust Fund?
Well, first, I think it's important that Albertans understand that the surplus numbers will never match cash numbers. That's how accounting works. I mean, simple examples would be we give money out for student loans paid at different times. You know, those will not always line up. We have to project royalty revenue real time in accounting under accounting rules, but we may not receive that cash until a later point in time. So it's not uncommon for cash not to match surpluses. But it's important that we emphasize that we want to be in cash surplus positions, which gives us opportunities to do other things. And Albertans don't want us to be borrowing money to pay bills, as a general example. So am I concerned? No. I'm standing up here today announcing an over $11 billion shift in forecasting, going from a $9.4 billion deficit to a $2 billion surplus. So I think it's relatively positive, but I am providing caution to my department and to Cabinet to be able to make sure that we continue with our fiscal discipline and not see this as something beyond what it is, and that we stick within the spending limits that we've already projected in 26, or very quickly we would end up back in the deficit position.
And just on the year-end fiscal results from 25-26. Just curious, what's up with the delay on that, and don't Albertans deserve to know the state of the books last year?
Well, Albertans certainly deserve to know the state of their books. Alberta is actually one of the earliest jurisdictions to be able to report on year end. We target June 30th. And something that we want to continue in the future. Many other jurisdictions their date is October 31st. Quebec, actually, as an example, is actually December 31st. The challenge that we have had is the 4 new health organizations have had to create their accounting systems to be able to match up with the provincial budget, which has created some delays through the process with the auditor. I have taken steps since May to be able to make sure that that will not take place in 27, and we need to complete that work. I don't want to get ahead of the Auditor General, who's just finishing up their work, which is why I won't speak to specific numbers. But I am very comfortable to say that we anticipate that we have a balanced budget, a surplus position in 25-26 based on what has been provided to the auditor.
Hi, Minister Edward Jan from City News. You touched a little bit on the tariff impact. What are some of the factors, the indicators that the province is looking at right now that could potentially impact the surplus that you're talking about right now, but also revenues that are coming into government coffers? Well,
we're fortunate in Alberta that what we're seeing so far from the American tariff situation impacts our province a little less than some other provinces. We still need to obviously work with our partners in Confederation and Canada to be able to make sure that we're defending the trade situation as best we can. But where our bigger concern in the short term is going to be is frankly in our counter tariffs. That's where we see potentially bigger impacts on Alberta's economy. We are watching that closely. Obviously, that changed with days before we went into this forecast. And so we aren't going to speak too much to specifics yet. As the Premier said yesterday, she has put together a cabinet committee co-chaired with Minister Scow, the Minister of Jobs and Economy, myself as Minister of Finance, and of course her. And we're having our first meeting this afternoon. She let everybody know that yesterday. And so we'll have some more specifics to say as this progresses, but that's what we'll be watching. I think another thing that's worth noting is we see this round of tariffs, the conversation much more about small businesses based on early analysis of what's taking place. And so we need to understand if things that we have done in the past are actually getting to individuals that will need help, businesses that will need help, employees that will need help. What the surplus does, though, for this is it creates a situation where we have more opportunities to be able to adjust or step in if needed to be able to help Albertans and Alberta's economy. But I think there's a lot of unknown in the next couple of weeks, and that speaks most to what I was trying to say in my opening remarks is we're going to be very strategic and make decisions that don't permanently negatively impact the province, but also step in when we need to that can help the people of the province.
I know it might be a bit early to ask this, but Albertans are going to be watching this and seeing that the province is posting now a surplus, and that's mainly driven by higher oil revenues. So when it comes to any type of relief that Albertans could potentially see, is it going to be in the form of rebates again? Is it going to be form of a reduction in the fuel tax? Is there anything that you can share on that front right now?
Well, there's already a significant amount of money in 26 that's going towards helping with challenges in affordability, which remains a big challenge for everybody in Canada, and Alberta's no different. Efforts on housing, for example, which we've seen significant reductions in rent as a result of that. That work's going to continue. It's in Budget 26. This does not change that situation. We will look at what we see take place over the next several weeks as we start to understand the tariff realities and where we land, if there needs to be anything specific that we need to step in to help with. I would say in those areas that's going to be much more focused on helping businesses be able to keep their doors open or be able to keep their employees employed, and so we'll have more to say in detail then. On the fuel tax, we still remain concerned that we can't guarantee that relief is passed on to Albertans when we run it through that system. Anybody who watches the fuel price when the feds removed their excess tax will see that it was very quickly the price just kept going up and up. We saw that last time. I was in the finance chair last time that we tried that in Alberta, and the big concern was whether or not we could actually get that to Albertans' pockets. We want to get that money into Albertans' pockets if we're providing relief. We're going through the assessment period right now, which is scheduled every quarter. It doesn't look like it's going to trigger 90, but it does look like it would trigger 80. And so we'll go to Cabinet and have a conversation about the best way to move forward. I will say that in the future, as we look at anything that may look like a rebate, if that's where we decide to go, we will move into a partnership with the CRA to be able to make sure that that is an automated process and remove that application process and the extra challenges that come with that for Albertans to make sure it's more seamless and quick.
Hi, Minister. Mark Villani with CTV Calgary. I know you have a cabinet meeting today on tariffs. I'm just curious, though, are you looking at kind of Saskatchewan's model, what they just did with retaliatory tariffs? If so, what kind of retaliatory efforts would you support, and when do they kind of become counterproductive too? It's a fine line, right? Yeah.
You know, I'm not going to speak in detail of where I think we're headed out of respect for that meeting that's going to take place. And as the Premier said yesterday when she was talking with you, she wants to make sure we're hearing from every minister associated with every sector to make sure we're focused in the right area. I, like her, though, like Premier Mo's approach a little better than some of the other approaches that I've seen. But we also have to continue to provide caution, right? I mean, we have to defend the country's trade situation. Everybody agrees on that. But some stuff is, if it's just going to make us feel better but not actually help Canadians, we need to step back and go, is this the right thing to do? You heard me say in an earlier answer that we're more worried about counter tariffs impact on our economy than we are on tariffs in Alberta. There's other contexts elsewhere in the country, I understand. That doesn't necessarily mean that we don't do that. But it means we need to be strategic and understand what the consequences are from that process. So I will echo again my boss's comments yesterday. The best thing we can do right now is not overreact, take our time, come up with the best strategy that's going to help Canadians and move our economy forward in a positive way long term. We need to try to get back to the negotiation table in Washington. The best thing that could happen right now is we still get a deal. And so I don't believe that we should give up on that. And then you'll hear more from Cabinet, though, on what we need to do. My focus as Minister of Finance in Alberta will be less on that, though I will be part of that conversation. Minister Scow and others will lead that. Our focus will be on how we provide relief for whatever comes from that process. And so we've been in contact, obviously, with the feds, and we are going to watch how their relief program goes out. And I will be working with my department on ways that we could amplify that or make sure that it's getting more specifically to areas of our province that have need, which may be different than other provinces.
And you've kind of touched on this already, but just if the U.S. were to respond with additional tariffs, specifically on Alberta energy or other exports, how much fiscal risk have you built into your projections here that you've laid out for us today?
We have not built specific risk to that inside Q1 update. I mean, it would frankly not have been possible based on when that took place. But we have built risk into the overall budget. The reason that I'm not overly projecting numbers right now is recognizing that volatility. If anybody stood up here and told you that they could tell you what that would be, please tell them to call me because we'd love to talk to them. The reality is it's just changing so fast. And so we're trying to create a situation with this budget that we create space to be able to deal with whatever may come because we don't know what's going to come. And at the same time, focus on what we can control, which is still keeping Alberta's spending in line, making sure that we're investing in strategic places that can actually help Albertans, and that we're not structurally damaging the budget long term, because that will have just such a negative impact on, and not just future generations, within the next couple of years. And we don't want to see that take place.
Hi, Colleen Underwood, CBC. So it looks as though, based on the current oil price and what's been happening in July and August, that we're quite above the $65 per barrel that we would have to meet to keep the $2 billion surplus. Generally, what I'm saying is that it looks like we could see more than a $2 billion surplus. At what point, what number are you guys looking at where you might actually be able to help the average Albertan who, sees the surplus and says, but I'm paying higher groceries, gas prices, I'm struggling, but the province is doing well?
Well, I think we already are. I want to be very clear on that. We're already in budget 2026. Albertans, through their taxes, are investing significant amount of money in helping Albertans through many different programs. And we've just invested again hundreds of millions of dollars in helping Albertans get a rebate to help with high WTI prices. We will react accordingly even before we know what the next WTI price will be for the next quarter based on what we see as need for the tariff situation. We're meeting right now, and we'll immediately move. I mean, getting to cash surplus is not going to be the limiting point for us to be able to step in and help Albertans. But what I can tell you is Albertans I talk to want us to be smart about that. They don't want me to go out and borrow billions of dollars, pay interest on it. They want us to be able to stabilize that budget and make sure that we're being very strategic with our investments. As for the projection on oil price, the department is right in the average with where every other projector is across the country. You're right. If the price stays what we've seen this week, we will end up probably in a higher surplus position. I will point you to the whole month of July, where I thought it was going to go back down with a 6 in front of it and hung around in that low 70s for a period of time. We can't stand up here and credibly say where that number is going to be, and so we need to create space to be able to make sure that Alberta will be in the best position for what will come. So I just want to be clear, us stepping in to provide any relief that we needed, particularly on tariffs, but also on affordability issues, is not stuck to whether or not we get to cash surplus. But we need to be aware that we're not at cash surplus when we make those decisions.
Right. Now, as far as some of the numbers on other industries, just comment on that, and how are you feeling about seeing, the manufacturing doing well and stuff like that?
I think there's some exciting things that get lost in what's taking place with WTI and royalty revenue. We see significant increase in economic activity that is impacting this. The Premier was saying to me yesterday, she was reminding me back when her and I first entered politics, her first time in politics, the budget that balanced that year was at $100 a barrel. This number here at $73.50, or it's less than that technically to balance because we're in a surplus position, is lower than every other balanced budget to date, which shows that we've been on a trajectory to create other economic activity into it, increase in personal income taxes, higher incomes in Alberta, the job performance numbers. These are all positive things that show that our target on trying to diversify is helping Alberta. We're still an oil and gas producing place. I don't think that's going to change anytime soon, but we are seeing positive numbers that are helping. I'd also like to emphasize the Heritage Saving Trust Fund. We have made strategic investments in the Heritage Saving Trust Fund for the future of the province, and we are starting now to see some of those returns impact the budget in a positive way. That's a good thing. That shows that strategy is working, and we're on target to hit the $35 billion target the Premier set for my department. I hope that we'll exceed that actually as we get towards the end of 27. And though if we can continue with that trajectory, it's going to continue to have a positive impact on the budget.
Hi, Minister. Zoe Mason, Canada's National Observer. Your government's been clear that energy exports are not on the table when we're talking about retaliatory action in the trade war. How would you respond to some of the other voices in the country that have said that by removing that from the equation entirely, you're undermining the Canadian negotiating position by possibly taking away our biggest leverage?
It's not our biggest leverage. It's the biggest opportunity to hurt Canadians that I see, and we don't want that. And so I understand other provinces who maybe don't understand how the energy system works and the interaction of our pipeline systems and other things inside North America may automatically early say, hey, this is maybe a good tool. The reality is if we use that tool, it will cause significant challenges for Canadians, not just in Alberta, from coast to coast. Some projections of job loss could be upwards of 500,000 jobs in this country. Most of Eastern Canada is not receiving oil or gas from this side of the country. It has to go through the States and come back up from the States. Frankly, much of our refined products that we would get in Alberta have to come back from the States. You need to think through a couple steps ahead about what the retaliatory measures may come from the United States. We see energy as part of this tariff conversation, but we see it as a way to help the rest of the country, help the feds be able to pay for their relief through the taxes that they're collecting from the oil and gas industry. Maybe, as the Premier said, where we would like to see us put some effort into trying to get more natural gas and other oil down to Eastern Canada during this moment to be able to help them out. But we don't want to see us bring in measures that may feel good in the moment, but that very quickly will actually hurt Canadians more than anybody else. That's what we want to avoid. And so our message to other provinces is, or we want to help, we want to work together as Canadians to be able to make sure that we can be in the best position afterwards, but we really strongly caution using energy because it will impact people. I'm going to bring up another one. How will it impact people's retirements? The impact on stock market portfolios and other things of that decision would be, frankly, catastrophic And so it's a mistake. We need to focus on things that will help, not hurt.
Great, thank you. And less than 60 days until the referendum, I'm curious if you can provide an update on when we might expect to see the results of that advisory panel on the potential impacts of separation.
Yeah, so the impacts of separation report being done by the School of Public Policy. The School of Public Policy reached out. We were hoping for right about now. They asked for just a little bit more time. It's complicated, but they're very close to being done. And so I would anticipate that you will see that sometime around the September long weekend, so about the next week or so.
And now we'll move to the phones. Operator, can you put the first caller through?
Your first question is Stephen Sandor from Edmonton Journal. Your line is now open.
Hello, thank you for doing this, Minister Nixon. In that budget, inflation is expected to increase. At what point does this become a worry again with the inflation number?
Well, look, inflation is always a factor, which may mean that it's a worry. When it specifically becomes a bigger worry for the department, I don't know if I want to predict that. What I will say is we're watching inflation. We are seeing some difference in inflation numbers than when we saw the surge in around 2022 when the Ukrainian war started. That was a much more higher inflation numbers that we were seeing during that period of time. We're not seeing the same level at the moment, but we're watching it closely. I will say that one of the things about counter tariffs, we do anticipate that that could create significant inflation, obviously, and so we want to make sure that we're paying attention to that. Whether or not that becomes, a crisis or something that we need to do more about, I don't believe we're there yet, but we are certainly watching it.
Do you have a follow-up?
No, that's good. Thank you.
And do we have another caller on the line?
Yes, the next question is from Chris Barco from the Calgary Herald. Your line is now open.
Hi, Minister. I wonder if you can talk a little bit about the budget surplus in 2025-2026. Specifically, how did the budget deficit swing so wildly from the $4.1 billion deficit that was predicted for the year end to now the surplus? What exactly was going on in that January to March period that led to the deficit going to a surplus, and was it all just related to WTI prices?
No, I'm confident saying to you today, Chris, that it wasn't all WTI in the case of 25-26. I'm not going to say specific numbers so the Auditor General's done. I know you're not asking that, but I just want to reiterate it. We do see some positive changes in the numbers I've seen about 25-26 beyond WTI. It'd be some similarities to what we're projecting now, some increases around the Northwest Upgrader as an example, significant increases in Heritage Saving Trust Fund earnings and other numbers along those lines that will make that up. If you go back and look, Chris, to that year, the reality is only about 30 days where WTI impacted that fiscal budget, like with the significant increases at the moment. They were big numbers, and we will see that as it comes out of the final audit. But it's not the only part about how 25-26 stabilized.
Did you have a follow-up?
I just wanted to ask you about the Alberta Energy Rebate Program. What is your assessment right now in terms of the uptake that it's getting from Albertans, how much money you had budgeted to spend out on it, and how much money you expect to, and whether it's a worthwhile program of repeating again or not?
Well, we are, I think 1.2 million Albertans have taken up the Alberta Energy Rebate Program last I checked. That number is changing obviously every day because it's still open right now. It was eligible for 3.4 million Albertans. We never thought that all 3.4 million would take that, though they were eligible for it. I still, we inherited a law. I mean, I inherited a law is probably a wrong thing for me to say, Chris, in the context I was part of the government that passed the law, but I inherited a process when I became finance minister. We would assess field by the quarter and then get relief out to Albertans. We remain committed to the principle of that process, that when you're in high WTI, there's unique opportunities that come for Albertans, and we want to be able to make sure that we can provide some relief in big moments like we see taking place right now because of WTI. I will stress again, I was there in 2022. I was sitting in this chair, and we were inundated by Albertans who were extremely frustrated that was not being passed on to them, at least in their perspective. And so we remain committed to wanting to provide relief in WTI moments, but we also remain committed to wanting to make sure it gets into Albertans' pockets. I believe the biggest challenge on the relief program, and we knew that it would be, is that we can't partner up with the CRA in that short a notice. And so I've instructed the department to begin that process to be able to make sure that in the future, any rebates, whether it be gas rebates or other programs, will be done in partnership with the CRA, which will eliminate that application process for Albertans and will significantly streamline it. I'm not saying that's where Cabinet's going to land after we see this next fuel assessment, but I am saying the principles that led to the decision this spring still remain. We want it to be in Albertans' pockets, and we remain committed to trying to share in WTI prices with Albertans in real time to help with affordability issues.
Do we have another caller on the line?
Yes, the next question is from Jason Margoseff from CBC. Your line is now open.
Hi, Minister Nixon. What's your mood being at the helm of this budget with such a dramatic upswing in such a little time?
I'm cautious. I'm happy. This is a good thing for Albertans. I mean, how can you not be in a good mood to stand up here and announce a $2 billion surplus and over $11 billion swing in the fortunes of our province? But I also, I would say this actually, Jason, having had an opportunity to be here in 2022 when we were dealing with the exact same moment, a little bigger numbers, but the exact same moment, I know how quick it changes. And so right now my mood is let's not make the mistakes of the past. Let's take the success that we're seeing, but let's make sure that we don't create structural challenges across our budget that in the long term are going to create bigger deficits and will hurt Albertans. And so I think this is a great opportunity for our province, and I intend to take advantage of it. But right now, my main focus is to make sure I don't make the mistakes that I think other people have made in this moment when they were sitting in my chair.
My follow-up is you'd probably encounter out there a large lineup of people who would say the mistakes of the past include allowing Alberta's budget system to be so volatile, so subject to the whims of the oil price markets. What are you doing to fix that?
Well, we're doing several things. We continue to focus on diversifying the economy, and we're seeing results across this update and across the economy in general as a result of that focus. The Premier's objective to be able to increase the Heritage Saving Trust Fund is already starting to show positive impacts on the budget. That's one of our main goals, will be to continue to increase that so that it can help in the long term be able to eliminate the volatility or at least lower the volatility of WTI prices on Albertans. In 2022, I put the largest payment into the Heritage Saving Trust Fund since Peter Lougheed. In this budget forecast update and in 25-26, when it comes out, it'll be clear that that investment and its earnings is paying dividends for Albertans. And so those are some of the areas that we're focused on right now. But we can't lose sight of the fact that we're a resource-producing province. And we have an oil and gas industry that is doing amazing things for our economy, employs many people in this province. And right now is frankly the solution to so many different challenges, not only in Alberta, but in Canada and across the world.
Perfect. Do we have another caller on the line, operator?
No more questions.
Perfect. Thank you, everyone, for joining us.